Okay. Good morning, everybody. I'd like to welcome you from the Escondido Chamber of Commerce to our January Government Affairs meeting. We are joined this morning by Cecilia Catlin from the US Department of Treasury, and of course our CEO and President, Mr. James Roten. I'd like to remind everybody that the meeting is being recorded. You can find that on our Chamber website under News and our virtual Zoom meeting library, or on the Chamber's YouTube page. I'd also like to remind people that if you have any questions, there is a Q&A tab on the bottom of your Zoom screen. Please post your questions into the Q&A and we will ask those questions to Cecilia at the end of her presentation. She'll be giving a PowerPoint presentation and she'll discuss a little bit more about what that's going to be. In the time being, I'm going to turn it over to Mr. James Roten, JR, and take it from here.
Hey, good morning, everyone. Thank you, Chris Cochran. And we are very pleased to have Cecilia Catlin here. Cecilia is the IRS Senior Stakeholder Liaison for the US Department of Treasury. And Cecilia is going to be going over and talking to us this morning about tax law updates for 2021, COVID-19 updates in relation to taxes and funds that were received during the pandemic, and maybe a brief update on future funding that we're all interested to know about also. So Cecilia, without any more to do, would love to have you take the reins, and we look forward to hearing your presentation. And remember, folks, it is recorded. Thank you, Cecilia.
Thank you very much. Thank you so much. And thank you for having me. Today, I'm going to talk about the highlights of tax changes from a tax forms perspective. Last year was extremely unusual, and this tax filing season will be unusual as well. The whole COVID outbreak has impacted so many of us in so many different ways, and the government's response was to provide financial relief. So from a tax perspective, in March 2020, the president signed the Families First Coronavirus Response Act into law, which provided employers with refundable tax credits to reimburse them for the cost of providing coronavirus-related leave to their employees. The IRS also provided a tax filing and payment relief to individuals and businesses by postponing the filing deadlines and signing into law the Coronavirus Aid, Relief, and Economic Security Act, known as the CARES Act, and it began distributing millions of economic impact payments. So the implementation of this complex stream of legislation during the 2020 filing season amid a global pandemic required a great deal of resources and unprecedented speed. So when it comes to the 2021 filing season, major tax law changes and impacts to hundreds of tax products have resulted. My plan today is just to give you a high-level view of some of those changes, since many of these topics can be very complex. Hopefully this will help you have a more successful filing season this year. We've got a lot to cover, but I will leave some time, as they mentioned, at the end for questions and answers. And I'll also provide you with my email so you can send me inquiries that may need further research.
Great.
The objectives of today's session are to increase your knowledge of some of the tax form changes impacting tax year 2020, and also raise your awareness of some of the new forms that are available for 2020. It's important to highlight these tax changes from a tax perspective because the forms are the vehicle, the primary vehicle through which general public will interact with the tax law. So the general public uses these forms to actually interact with the law. The forms take an abstract legal change, and it takes those changes and it makes them concrete for you and your clients. And these tax forms touch on almost all facets of tax law and involve most offices within the IRS. So in a very meaningful sense, by reviewing changes to tax forms from 2019 to 2020, and by discussing new forms, we're covering almost all of the income tax changes that may impact you and your clients this filing season. A major aspect of implementing recently enacted tax law continues to be developing that legal guidance that taxpayers and tax professionals need and to understand in order to navigate the new law. This guidance, in turn, drives the changes to the forms, drives the changes to the instructions and the publications, and it also drives the creation of new tax forms. So with that said, let's move on to looking at the 3 recent tax laws that have 2021 filing season impacts. Public Law 116-94, the Further Consolidated Appropriation Acts of 2020, was enacted December 20th, 2019, and included 3 divisions with over 70 tax provisions, including extenders, disaster relief, and numerous retirement changes. Not only did the Further Consolidated Appropriations Act have 2021 filing season implications, but it also affected the 2020 filing season, where we determined that numerous tax products were impacted. And as a result, we were required to update the tax products affected by the legislation. Then on March 18th, 2020, the Families First Coronavirus Response Act was signed into law. In part, it required certain employers to provide their employees with paid sick leave or expanded family and medical leave for specified reasons related to COVID-19. And it provided employers with refundable tax credits to cover the cost of providing the leave. Finally, on March 27, 2020, the President signed into law the Coronavirus Aid, Relief, and Economic Security Act, also known as the CARES Act. The CARES Act included a number of tax items applicable to individuals and to businesses. Individual relief included the recovery rebates, retirement plan relief, and above the line deduction of up to $300 for charitable contributions. On the business side, the CARES Act provided eligible employers with employee retention credits, payroll tax deferrals, and carrybacks of net operating losses. One of our very first tasks after these laws passed was to start updating the forms, instructions, and publications. So let's take a look at the Further Consolidated Appropriations. As mentioned earlier, Public Law 116-19 was enacted December 19 and included 3 divisions with over 70 tax requirements, including extensions of more than 30 expired provisions. Disaster relief as part of the Taxpayer Certainty and Disaster Tax Relief Act, and numerous retirement changes as part of the Setting Every Community Up for Retirement Enhancement, also known as the Secure Act. So there's a lot of legislation that was put forth, and it keeps going and going. So bear with me. On the next screen, you will see there's some Secure Act details. And I'm going to just take a quick high-level review of a couple of these. Form 8881, the credit for small employer pension plan startup costs and auto enrollment. Now, the title of Form 8881 was modified to reflect the new Internal Revenue Code Section T. So that's quite a mouthful. The law increases the business tax credit for plan startup costs. The tax credit is increased from the current cap of $500 up to $5,000 in certain circumstances. Additionally, small business owners are eligible for a further $500 tax credit for 3 years for plans that add auto enrollment for new employees. The next item, the kiddie tax. Regarding the kiddie tax, some families reported to lawmakers that the Tax Cuts and Jobs Act increase the tax on survivors' benefits paid to children whose parents died while serving the U.S. Armed Forces. The Secure Act modified the rules relating to the taxation of the unearned income for certain children. Specifically, it repealed Internal Revenue Code Section 1J4, relating to special rules for certain children with unearned income, effectively eliminating the taxation of the unearned income of children at rates applicable to trusts and estates. In this particular case, taxation would revert back to the parents' marginal rates. And these citations that I'm giving you can become super complex very quickly. So I encourage you, if these are applicable to your business and what you're doing with your clients, to please go and read these in greater detail. Okay. Retirement savings and pension changes. The retirement savings, pension provisions, and distribution changes as part of the Secures Act are vast. Okay. IRA changes, which are generally effective for tax years beginning after December 31st, 2019, include the repeal of the maximum age for allowing contributions to a traditional IRA. This provision allows working individuals to continue making contributions to an IRA past age 70 and a half. The required minimum distribution age was changed from 70 and a half to age 72. Also, there was a shortening of the distribution period for non-spouse inherited IRAs to a 10-year maximum. Non-spouse designated beneficiaries of an IRA with certain exemptions would normally be required to take distributions over 10 years instead of distributions over the designated beneficiary's lifetime. So that's a major change there. And the 401k changes include requiring plans to offer participation to long-term part-time employees, permitting plans to adopt qualified birth or adoption distributions, encouraging auto enrollment by increasing the cap to 15%, adding new tax credits for small employers using auto enrollment plans, and there's that form 8881 again, and streamlining the safe harbor for non-elective contributions. So all of these may or may not make sense to you at this point, especially if you haven't, started delving into those, but just wanted to give you some quick updates on what's going on there. Now, the next slide shows Taxpayer Certainty and Disaster Tax Relief Act. And this act included a slew of individual extenders, business and energy extenders, as well as disaster relief. And the next slide has some of those highlights. As far as the individual extenders go, the Taxpayer Certainty and Disaster Tax Relief Act included the following: exclusion of qualified principal residence indebtedness from gross income through 2020. Mortgage insurance premiums are treated as deductible qualified residence interest. The adjusted gross income floor for medical and dental expense deductions was reduced from 10% to 7.5%. Also, the above-the-line deduction for qualified tuition and fees was extended for calendar years 2018, 2019, and 2020. The next slide shows disaster tax relief. This legislation also included disaster relief for federally declared disaster areas during 2018 and 2019. The relief includes removing the requirement that taxpayers itemize to claim a disaster loss deduction. It also includes forgiveness of early withdrawal of penalties for qualified disaster distributions, the recontribution of amounts withdrawn for a home purchase or construction that wasn't purchased or constructed because of a qualified disaster. And with respect to loans from qualified plans, it suspended repayments, and it increased the amount available for a plan loan. An employee retention credit is also allowed for employers in these affected areas, as well as special casualty loss rules for affected individuals. This type of employee retention credit is not to be confused with the other new employee retention credit available under the CARES Act for employers impacted by COVID-19. So let's take a look at some of these coronavirus tax changes. As you can see from this next slide, both the CARES Act and the Families First Coronavirus Response Act provided significant tax relief to stimulate the economy. I'll address each of these bulleted items and provide additional details in the upcoming slides. Deferral of employment taxes is a really big one. The CARES Act defers the deposit and payment of certain payroll taxes. Deposit and payment of payroll taxes due from the beginning of the CARES Act, which was signed into law March 27, 2020, and ending on December 31st, 2020, are deferred. Okay. The 6.2% old age survivors and disability insurance incurred by employers and 50% of the Social Security tax incurred by self-employed persons qualify for that deferral. Okay. 1/2 of the eligible deferred amount is due by December 31st, 2021, and the remainder is due by December 31st, 2022. Now, there's a whole lot of other nuances about deferral of employment taxes. So if you are opting to do that, I would suggest that you go ahead and review the deferral in greater detail. Okay. The next slide has sick and family leave credits. And the Families First Coronavirus Response Act, in part, required certain employers to provide their employees with paid sick leave or expanded family and medical leave for specified reasons related to COVID-19. And it also provided employers with refundable tax credits for providing the paid leave. Employers can claim these credits on their employment tax return, while self-employed individuals can claim this on their individual income tax returns. Self-employed individuals can calculate their credit on the new form 7202. This also applies to certain household employers, and Schedule H, household employment taxes, was significantly revised for 2020 for the reporting of that credit. The next slide has some information about the new Form 7202. The Families First Coronavirus Response Act, as previously mentioned, provided to certain self-employment individuals refundable credits for sick and family leave needed as a result of the coronavirus. And the new Form 7202 has been created to allow self-employed individuals to figure these credits. Part 1 of the new form will figure a sick leave credit based on Section 7002, and Part 2 will figure a family leave credit based on Section 7004 of the Act. These two credits will be included on Schedule 3, line 12B, when completing your 1040. Form 7202 is filed separately by each taxpayer with a net self-employment earnings. So a joint tax return may have two forms of 7202 attached. More changes. Schedule SE. We removed the short version, Section A of Schedule SE. So now all filers of Schedule SE will use the method of calculating self-employment tax found in Section B. As a result, Schedule SE will no longer allow joint return filers to use a single Schedule SE. Each spouse with taxable net self-employment earnings may be eligible to defer tax on their separate Schedule SEs. We also added a new Part 3 to Schedule SE that allows filers to figure the maximum amount of self-employment tax that may be deferred. The entire amount of self-employment tax will be reported on Schedule 2, line 4, when filing your 1040. The amount figured in this new Part 3 will be used in a worksheet in the Form 1040 instructions to figure the total amount of self-employment tax and household employment tax from Schedule H that may be deferred. This was a direct result of the CARES Act, Section 2302, for delay of payment of employer payroll taxes. As you all may remember, Form 1040 was redesigned in the wake of tax reform. I think it was about 2018 when that occurred. The Treasury and the IRS worked together to design a new concept that consolidated 3 versions of the Form 1040 into a single version that all 150 million taxpayers use as a base form. Some of the most notable changes of that 1040 are as follows. Starting near the top of the form, the virtual currency question has been added to the form under the address section on page 1. This was done to give the question improved visibility. Moving down that form slightly, we reformatted line 10 to include the new $300 above the line deduction for charitable contributions, if and only if the standard deduction is taken. This was a result of the CARES Act, Section 2204. And as of right now, this provision is effective for tax years beginning after 12/31/2019. On page 2, we reformatted line 25 to include separate lines to report federal income tax withholding from Forms W-2 and Forms 1099 for increased visibility. Next, we added a new line to the face of the Form 1040 for 2020 estimated tax payments and the amount applied from the 2019 return, which is located on line 26. And this addition resolves a frequent comment where scores of people said we had removed the estimated tax payments line because they couldn't find it on Schedule 5 in 2018, and they couldn't find it on Schedule 3 in 2019. So this change eliminated all of those problems. Further down the page, we also added a new line 30 for the recovery rebate credit. And a worksheet will be included in the 2020 Form 1040 instructions so that taxpayers can figure their recovery rebate credit after accounting for any economic impact payments received. This was a result of the CARES Act, Section 2201. Last but not least, at the bottom of the page, we deleted the third-party designee checkbox in the Pay Preparer Use Only section. And we did this to eliminate confusion. So all third-party designations will be made in the third-party designee section of the return. The next slide shows Form 1040 SR. And as a quick refresher, the Bipartisan Budget Act of 2018 required the IRS to create a tax form for seniors. Taxpayers age 65 or older have the option to use this new form when filing their 2020 federal tax returns. Retirement is not a requirement, and taxpayers working past age 65 have the option to file Form 1040 SR. The Form 1040 SR remains identical to Form 1040 with the same lines and line numbers. The only difference are those that are improved, that relate to the improved readability with the increased font size and vertical entry spacing. Okay. So let's jump back to this recovery rebate, okay? The CARES Act allows for advance payment of the recovery rebate credit, and individuals who receive less of what's known as an economic impact payment or EIP than entitled, they can claim an additional amount as a recovery rebate credit on their 2020 tax return. As mentioned earlier, the recovery rebate credit will be claimed on the new line 30 of both Forms 1040 and the Form 1040 SR. A worksheet in the Form 1040 instructions will be used to figure the credit. In order to calculate that recovery rebate credit, a person needs to know the amount of their EIP received in 2020. This amount was provided on Notice 1444, Your Economic Impact Payment, and it provides information about the amount of your payment, how the payment was made, and how to report any payment that wasn't received. The Form 1040 reconciliation this year is only to claim an additional credit. Now, there may come, other rules and regs related to this, but for now, the reconciliation this year is only to claim an additional credit. Okay. Schedule 1 of Form 1040. Let's take a look at that. There are some notable changes regarding the Form 1040 schedules. Now, as you may recall, Schedules 1 through 6 were introduced in 2018, and we received many comments about the number of schedules and the resulting use of paper when printing the final return. So in response to this, in 2019, we reduced the number of schedules by half. And in 2020, we've continued to improve on these schedules by making more changes along the way. We removed the virtual currency question from Schedule 1 and placed it on page 1 of the Forms 1040, 1040 SR, and 1040 NR, as I mentioned before. And Form 1040 Schedules 1, 2, and 3 can now be filed with Form 1040 NR, in addition to being fillable with Forms 1040 and 1040 SR. So that's a good thing. Schedule 3 on the next slide, we removed the estimated tax payments line on Schedule 3 and added it to the face of the 1040, the 1040 SR, and the 1040 NR. As I mentioned, this resolved a frequent comment where people were saying they just simply couldn't locate it on the schedule. So now it's back on the face of the forms. We revised and expanded line 12 for other credits. Line 12 was formerly line 13. It has been revised to read other payments or refundable credits. And new lines 12A through 12F are added. The check boxes that were on the line are changed to entry spaces now. Okay, so take a look at that. Line 12B has been added, and it is used to report qualified sick and family leave credits for certain self-employed individuals from Schedule H and from the new Form 7202. A new line 12E is used for certain taxpayers who file Schedule H or Schedule SE and who are eligible to defer part of their Social Security tax. The amount to enter should be included in the Form 1040 instructions. The new line 12F is used to figure the total of lines 12A through 12E. Form 1040 NR. This is our next slide. As part of this form, 1040 NR is being redesigned to look like Form 1040 with almost all of the same line numbers, and it will also use the same Form 1040 schedules 1 through 3. So those three are the key schedules. Schedules A, NEC, and OI are being removed from the form and are being issued as separate products. Form 1040 NR Schedule A is the schedule on which the allowable itemized deductions for non-resident aliens are listed. Schedule A will conform to Form 1040A wherever there is overlap. So we are trying to, keep the forms uniform, if you will. As part of the Form 1040 NR changes, Form 1040 NREZ will become obsolete for 2020. Okay. Another Schedule LEP is worth mentioning here. Executive Order 13166 mandates that federal agencies provide limited English proficiency persons with meaningful access to products and services. We are committed as an agency to provide language assistance as part of our mission to deliver quality service to all taxpayers. This initiative has enabled the creation of the new Schedule LEP. As mandated by the IRS Commissioner-backed multilingual strategy designed only to be filed with the Form 1040 series returns. Schedule LEP is effective beginning in tax year 2020, and its purpose is for taxpayers to state a preference of receiving written communications from the IRS in the top 20 limited English proficiency languages. There is one question on the schedule which asks the taxpayer's language preference, and each language is assigned a 3-digit code. Only one language choice can be made per filing. The IRS will then send only communications, such as a notice, in the preferred language if the communication has been translated. A copy of the communication in English will also be provided. If married taxpayers file jointly and both spouses choose to receive notices in alternative languages other than English, each spouse must file their own Schedule LEP. Okay. Okay, next is e-filing Form 1040X. About 3 million Form 1040Xs are filed by taxpayers each year. Taxpayers are now, for the first time, able to file their Form 1040X electronically using available tax software products. Making the 1040X an electronically filed form has been a goal of the IRS for a number of years, and it has also been an ongoing request from the tax community. So the new electronic option allows IRS to receive amended returns faster while minimizing errors normally associated with manually completing the form. This is a major milestone for the IRS, as more than 90% of taxpayers use e-filing routinely, okay? And the big hurdle that's been remaining for years is to convert amended returns into this electronic process. And we are super excited about offering this new service. Taxpayers can also use Where's My Amended Return online tool to check the status of their electronically filed Form 1040X. Now, only tax year 2019 for Forms 1040 and 1040SR returns can be amended electronically. Additional enhancements are planned for the future, as we've had such a favorable response to being able to e-file Form 1040X, among other forms. And there is a list of forms on our website that you can file electronically. So take a look at that. The next slide has a new products list. This is just some of the new products: the Schedule LEP, that Form 7202. There's the Form 8915 regarding the disaster retirement plan, et cetera. Those schedules that I mentioned, Schedule A, NEC, et cetera, and Spanish products. So you are welcome to take a look at that as well. I'd like to, however, touch bases on the new Spanish products on this next slide. And as I mentioned, we are focused on enhancing the experience for all taxpayers, especially those who have limited English proficiency and other disabilities, those are coming down the pipeline as well, because we are so invasive sometimes with all of our information and requirements, et cetera. It can be quite overwhelming. So we want to bridge the gap as best as possible. And we are developing a service-wide multilingual strategy, and will continue to take steps to offer more materials in more languages. We've made significant strides towards the debut of several limited English proficiency tax products beginning with the 2021 filing season. Form 1040, Form 1040 SR, and those critical 3 schedules, Schedules 1, 2, and 3, and their instructions will now be offered in Spanish for this tax filing season. The new Schedule LEP, as mentioned earlier, which will allow taxpayers to select their preferred language, will also be offered in Spanish. Other products will be translated into Spanish and other languages as resources allow. So we are really gung-ho about doing that part of our project. This next slide is a very short one, and here's all you need to know about Form 1099 non-employee compensation. Number one, it has been restored. Okay, it removes reporting from non-employee compensation. It removes it from the 1099 miscellaneous, okay, and it's due January 31st. So we've segregated it, we've called it out, and now you do not have to use the 1099 miscellaneous, which is due February 28th, to report non-employee compensation. So it's back, okay? The next slide has some quick updates that I'd like to give for business tax returns, the Paycheck Protection Program, and the economic impact payments, et cetera. And we are, in fact, coming into the home stretch, okay? The IRS began accepting all business tax returns January 8th. You can monitor the modernized e-file status page for updates and get current information on events affecting the filing season by subscribing to IRS Quick Alerts. Publication 4163, Modernized e-file information for authorized IRS e-file providers for business returns, is now available. Okay, so take a look at that on irs.gov. Stay in the know by joining and subscribing to the IRS Quick Alerts. Sometimes you get a pop-up for something that you weren't even expecting, and it helps to keep you moving forward and avoiding these potentially roadblocks, if you will, or delays, I should say. Okay. The Paycheck Protection Program reopened this week for new borrowers, as well as for certain existing program borrowers. Initially, only community financial institutions will be able to make first draw PPP loans starting yesterday, and second draw program loans on Wednesday, the 13th. Okay. The Paycheck Protection Program will open to all participating lenders shortly thereafter. So I encourage you to visit the SBA.gov website for additional information. The Treasury does have some information on our website. You can go to irs.gov and see some links there, but the SBA.gov is the hub, if you will. They have as much information, or maybe even more, because they are on the cutting edge, and they are also the administrator of the Paycheck Protection Program. So SBA.gov is your link, your lifeline, if you will, to the Paycheck Protection Program. Now, I'm sure you're probably all aware that the IRS and the Treasury Department began issuing a second round of economic impact payments, often referred to as stimulus payments. I think they started about 2 weeks ago. There is no action required by eligible individuals to receive this second payment. The payments of up to $600 for individuals, or $1,200 for married couples, and up to $600 for each qualifying child are automatic. Most people who have an adjusted income for 2019 not exceeding 75,000 for individuals and 150,000 for married couples filing joint returns and surviving spouses will receive the full amount of the second payment. For filers with income above these amounts, the payment amount is reduced. Okay. As usual during tax time, and especially when a new program is implemented, criminals beef up their schemes to steal your identity, your business information through data breaches, and now economic impact payments. The only thing I'd like to say here is to just know that the IRS doesn't send unsolicited text or emails asking for your banking information. We will not call or high pressure you for information or money. And we will not ask you to verify personal or financial information for you to receive an economic impact payment. So I encourage you to get the word out to your family, your friends, your employees, business associates, that there are numerous, oh gosh, there's hundreds and hundreds of scams going on right now. So visit irs.gov for more information to protect yourselves and your businesses from scammers.
So,
The next slide shows additional resources. Take a look at some of these. These are all at irs.gov. And you can go there to get some additional information. And then the next slide has newsroom releases. And these are links that I included to irs.gov regarding the Paycheck Protection Program and the economic impact updates. Those are seemingly the hot topics of the day, if you will. So please visit those at your leisure and become well-versed in those. And I think that's all I have for today. I hope this gives you a better awareness of the vast changes that this unprecedented last year has wrought. My goodness, and it's ongoing. So we're not out of the, we're still flying the plane as we're building it. So we're not out of the neck of the woods, the dark part of the woods yet. But here is my contact information. So if you have any questions or concerns, you can always email me. And if there are tax matters that are very complex or very detailed, you have my address here so that further research can be done. Okay, and then we can get back to you with tax codes and where to look and help you navigate some of these complex issues. Okay, so that's all I have for now. I'll turn it back over to the chamber.
thank you, Cecilia. And I'm checking in the chat room or seeing if we have any questions. If you do, please, this will be the right time to submit those. I know Cecilia's presentation was very complete, and it looks like a lot of form changes and adjustments here, Cecilia. And good to know that the IRS is already accepting filings. So for those of us anxious to get that behind us, the IRS started accepting on January 8th, right, Cecilia?
That is correct.
So, and Cecilia, good warning about the fact about scammers, because it's not unusual for us to get calls about scams here, and also to reading about the scams that are continually going on. So obviously very important to protect. And your point about the IRS not reaching out in typical forms is probably really, really relevant there. And of course, everybody's anxious to know what is going on with the PPP money. That is something that we know a lot of small businesses are looking to see, and with the changes perhaps that allow some of the nonprofits to also be able to apply for those funds is a substantial change compared to the first round.
Yes.
So if there aren't any other questions, we are going to thank Cecilia Catlin with the IRS for joining us today and presenting, and we appreciate the detail to which she was able to present to us today. And we do also want to talk about the next upcoming chamber event, which will be our first of the year, Friday Wake Up Escondido, coming on Friday the 22nd at 8 a.m. And this will be centered on guest speaker Dave Jones, who will be talking about setting goals for 2021. Dave is a expert sales presenter and advisor. So he's always got something interesting to say. So we'll look forward for you to please register to join us then on Friday, the 22nd at 8 a.m. As always, we thank all of our participants for joining us today. And we look for more of these interesting things that we can bring to the business community of Escondido. If there aren't any questions, we'll go ahead and sign off now and wish everybody a great day. And please remember to go to the Chamber website for updates on all things happening business-wise here in our northeast corner of San Diego County. That's the Escondido Chamber of Commerce. Have a great day.